Today we did an episode talking about what does it take to become a shipbuilding country. And this story came from the annual BRS report. Now, the BRS report is something we look at a lot here on this channel. Every year when the annual report comes out, it has an entire section on shipbuilding. And the information from that report is crucial to understanding what is going on with global shipping. But perhaps the most attention-grabbing chart in the entire report is this one that shows the percentage of the market that China has grabbed in terms of shipbuilding. So this is the order book for vessels. Back in 2022, China hit 51% of the market share, 2,107 ships. South Korea was in second with 27.5%, 678 ships. Japan at 16%, Europe at 1.9%, and the rest of the world at 3.6%. In 2025, which is what this report covers, China has gone to 70.9%. In terms of tonnage, they jumped from 122.4 million deadweight tons to 333.3 million tons. And ships have almost doubled from 2,107 to 4,055. South Korea has dropped in its market share from 27.5 to 16.6. Japan's market share declined from 16% to 8.9. Europe lost a full percentage point down to 0.9, same as the rest of the world down to 2.6. But what's really interesting here is if you look at South Korea and Japan, which have lost substantial percentage points of market share, they've remained pretty stable, which means that all the additional shipbuilding, all the new building that's going on top of normal shipbuilding is going to China. And China's percentage there, 70.9%, is tremendous. And we're going to break down this section of the BRS report for you and discuss it. If you're new to the channel, hey, take a moment, subscribe to the channel and hit the bell so you'll be alerted about new videos as they come out. Now, there's a lot to this report. I'm not going to be able to go into everything in detail, so we're going to take kind of the highlights here and discuss it. The major findings in the report is this. It's really a tale of two halves and a story of enduring reliance. So what they underscore here is that in the first half of 2025, that part of the year, those 6 months, were really marked by investor caution, extended delivery schedules, elevated pricing, and constrained new contracting momentum. And this largely came from efforts under the Trump administration to try to target Chinese shipbuilding. Now, in the second half of 2025, things changed a bit. We saw a rebound in ordering activity, most notably in China, which expanded its global order book. The South Korea's market share weakened. And most importantly, we're seeing that 2025 is made up of these very two distinct aspects. Now, the big issue that they note here, and I think it's really one of the most important, the major choke point in shipbuilding right now is engines. The production of engines, not just normal diesel engines, but dual fuel engines. These are engines that use not just normal marine diesel fuel, but can also use liquefied natural gas, methane, ammonia. This is the big aspect of global shipping right now because of IMO 2050, which is trying to push shipping to become a net zero carbon emissions. There's a lot of pushes against that right now. But because of that, any ship built in 2026, which could have a potential 20 to 25 year service life, you have to be thinking about what provisions does that engine have to reduce its carbon emission, because if things change at 2030 and 2040, you've got to be able to meet those requirements. And that is a big issue when it comes into shipbuilding. So for historical context, these charts show you deliveries of ships versus demolitions. In the first chart, you can see how many new ships are being built in millions of tons. And then in the fleet evolution, we've seen the global fleet increase steadily since 2000. And most significantly, what we've seen is a spurt in shipbuilding, particularly after the 2008 global recession. And now we're seeing another uptick take place. This largely comes after the global supply chain crisis. But the trend since 2000 has been in deliveries. You'll see demolitions, which hit a spike in 2012 after 2008, really hasn't been happening in large measure since 2021. We saw demolitions taking place. This is the recycling of vessels. Because of shortages in shipping and the elongated freight lines, what we see is more ships being retained. I take you over to Jean-Paul Rodrigues' site, The Geography of Transport Systems. If you haven't looked at this site, I really recommend it. I'll have it in the show notes. But Jean-Paul Rodrigues, in his book, identifies 5 basic types of vessels, but the vast majority of ships can be broken down into 3 types. One is the dry bulk, which makes up about 40% of the global tonnage. Liquid bulk, these are tankers, LNG, petroleum carriers, about 35%, and then containers make up about 13%, and the remaining 12% is a mix of break bulk and neo bulk. And you see in the chart here those types of vessels. So bulk, tankers, and containers. You can see the uptick in the construction of containers since 2020. Same thing with bulk. Bulk vessels, these are vessels that haul ore and grain. Those have been the huge majority that's being built. And now we're starting to see a little bit of an uptick right now in tanker sales. So the report also looks at freight rates. It breaks it down for bulkers, it breaks it down from tankers, but I think the most significant probably is containers. And if you look at the rate for containers, and it breaks it down based on the different size of vessels, from feeder vessels of about 1,000 TEUs all the way up into the large container vessels over 8,500 TEUs. Just a reminder, the largest ships out there are ultra-large container vessels. These are ships over 18,000 TEU up to 24,000 TEU. But you can see the massive spike that took place in 2021 through 2020. End of 2022 into 2023, and then the resurrection of those rates in late 2024 into 2025. That had the first hump there is obviously the global supply chain crisis. The second one happened because of the diversion around the Red Sea caused by the Houthis and its continuation. You can see how substantially higher freight rates are today than they were, for example, in the 2010s. As a matter of fact, container liners made more profits in 2021 than they had made the entire decade prior to that. And then in 2022, they made even more money. And so we've seen that. Now, we're also seeing that change in tankers and bulk carriers, but nowhere near to the scale and size you're seeing in containers. Now, money in the pockets of sailors means they're going to spend it. Take my word for that. And you can see that here with ship construction. So if we look at new orders for the different standard types of vessels, you can see for 2025, we have a big uptick in VLCCs, very large crude carriers being built. Same thing for the bulk carriers and the Cape-size vessels. These are the ships that go around the Cape of Good Hope, really massive vessels. But the group that's been ordered in large numbers since 2021 has been container ships, and that hasn't abated at all. It's really amazing the number of container ships on order. But what we're going to do is break down the 3 types here in a little bit of detail: tankers, bulkers, and container ships. So by the end of 2025, the number of bulkers on order was 143.1 million deadweight tons. That represented 13.5% of the total active bulker fleet, which stood at just somewhere in the range of over 1 billion tons. And it remains the largest fleet on the water today. Now, the distribution of orders was balanced across the major dry bulk fleet segments, from Handysize to Newcastle Max. Overall, the deliveries in 2025 totaled about 35 million deadweight tons. Now, that's a little bit below the 10-year average. The bulker order book remains largely controlled by 2 countries. You'll notice that South Korea has no bulk carriers under order right now. Japan has 19.2%, whereas China has 77.3%. Now, bulkers are very easy ships in terms of vessel construction to build. They're largely big empty hulls, and the only thing you really have are the hatch covers and the cranes, and obviously the propulsion and navigation systems on the stern, but largely just big, huge, open, cavernous vessels. China and Japan have largely capitalized on bulk production because you can do it almost assembly line. I mean, these are almost cookie cutters coming off the productions. So second, we look at tankers. Now, tankers have increased. In 2024, they represented about 14.9% of the order book. Now they're up to 18.9%. It is much more diversified across the vessel types than the dry bulk sector, with MR1s and LR1s. Now, these ships go in size order here. MR1s are the smallest. VLCCs, very large crude carriers, are the largest. The MR1s, MR2s, and LR1 and 2s tend to be clean carriers. They carry refined product. Panamax, Aframax, Suezmax, and VLCCs tend to be dirty ships carrying crude oil. Last year, tanker deliveries more than doubled compared with 2024 to total 20.3 million deadweight tons. This matched with the higher number of new building orders placed in 2023 and 2024. China and South Korea remain the dominant forces in the tanker building market. In 2024, China held 71.3% of that order book compared to 61.6% in 2023, but it declined in 2025 down to 68.7%. A lot of that had to do with efforts by the Trump administration in the US to get shipbuilders to shift away from China. So if you look at the ship sophistication levels, the more sophisticated vessels tend to be staying over in South Korea, with the less sophisticated vessels being shared between China and Japan, although China is making inroads across the different areas. Third, we look at container ships. Now, container ship orders increased from 50.9 million deadweight tons to 60.1 from 2024 to 2025. While delivery slowed, the ratio of the order book versus active fleet actually increased from 27% to 34.5. Last year, a popular ordering segment was the 18,000 plus TEU segment with 116 ships contracted, but comparatively, the feeder and medium-sized container carrier segment was also quite dynamic. What's really interesting is if you look at the percentages of TEUs on this order book, if you look at the orders placed in 2025, there are 675 ships at 5.3 million TEU, 20-foot equivalent unit. The ultra-large container vessels, of which 116 were ordered, make up 2.3 million TEU, and the average age of those ships is just 5.1 years. So get ready to see a behemoth number of ships out there. The ultra-large container ships are going to be out there in full force. However, what you see is the largest number being ordered, the 106 ships there, is those 1,500 to roughly 2,000 TEU ships. The other ones I think are really important are the kind of the mid-range, the 7,500 TEU size vessels up to about 18,000 TEU. Those are ships that can swing both through the Suez Canal and the Panama Canal. And once again, if you look at where those ships are being ordered, 77.1% are in China, 18.6% in Korea, and only 3.1% in Japan. Japan is really losing out in this market share. They are losing out in container ship production, which is really important because Japanese shipyards have a very innovative way to build ships. One of the things that they do, particularly with container ships, is they own the container ships and lease them to the operating companies. This generates revenue for the the shipbuilders, so that they can remain in business. They're going to have to change that over to bulk carriers and tankers if they lose more of the container ship sector. And then finally, you have kind of the specialized vessels, and this goes everything from roll-on, roll-off carriers to liquefied natural gas carriers. Now, new building activity for these vessels was around 7.3 million deadweight tons ordered. There was a significant decrease in the number of LNG carrier orders from 106 in 2024 down to 61. Similarly, we see the same number in LPG carriers from 153 down to 49. Last year, we saw car carrier orders drop to 10 ships from a record of 91 in 2023. Cruise ship ordering also halved in 2025. Demand for stainless steel chemical tankers was much weaker in 2024, and that's mirroring a trend we see in the oil tanker sector. So if we switch from shipbuilding over to demolition, what we'll see is demolitions picked up in 2025 with the volume of tonnage sent to recycling amounting to about 10.7 million tons. The figure, however, is very low, and it's well below the 10-year average, which is double that. Every year, this industry is saying we're going to see more and more ships heading to scrap, but COVID really curtailed that. And because of the elongated ton-mile routes going on, and now the further disruption in Hormuz, we're probably not going to be seeing a lot of recycling taking place. What this means is we can expect to see the average age of ships being sent to scrap to continually to increase. You see in the chart here how the average age was going down and then it's going back up again, with the average age for scrapping in 2025 for bulk carriers at 29 years, for tankers at 27, and for container ships at 32. Now, one of the most interesting sections in this report has to do with new build pricing. And they say this in the report: shipyard costs have been steadily increasing. Salaries are up, but a more significant factor has been supplier price hikes driven by inflation and higher demand. Despite the apparent boom in the market, shipyards are still facing difficulties. The rising construction costs seem to be outpacing the rise in new building prices, leaving shipyards less satisfied than one might expect. This chart is really the most eye-opening, I think, at times, because it shows you the cost for new building across both China, Japan, and South Korea, the three biggest nations. And they look at it from 2021 over to 2025, and just highlight a couple of ones here for you. Very large crude carriers. These are the big crude carriers that carry oil. We're talking about anywhere from 1 to 2 million barrels of oil. Back in 2021, it was costing you $95 million to build a new VLCC in China. It was $106 million in South Korea and Japan. Well, prices jumped to $118 million in China, $127 million in South Korea and Japan. If you look at an LR1 in 2022, this is a clean fuel product carrier, but if the ship is, let's say, dual fueled with liquefied natural gas, that cost you $60 million in 2022 in China, $70 million over in South Korea and Japan, and that price is pretty much flatlined. It's gone up in China to $67 million, but it's holding at $71 million in South Korea and Japan. If you look at bulkers, the big Cape-size vessels, you're seeing numbers from $60 million to $68 million in 2021, up to $70 to $78 million. If you look at a good-sized post-Panamax vessel, 7,000 TEUs, that was running you from mid-70 millions to high 70 millions. And by the end of 2025, it's almost 90 to 95 million. Now, if you build such a ship over in the United States, it's going to be really expensive because they do not have the volume of shipbuilding and they don't have that supply chain associated with it, and labor costs are going to be a big factor in the United States. And in truth, this is going to be the same over in Europe in many shipyards, unless you have government support and you have a line of manufacturing in place to help lower the cost. This becomes a problem. Now, we just saw orders being placed in the United States over at Philly Hanwha for 10 MR2 tankers. Will those ships come down in cost? I guarantee you an MR2 tanker, which is running you roughly about 50 million to about 60 million, depending on the fuel for the vessel, over in South Korea and Japan, will be much more pricier in the United States. But the only way to get that price down is by start building. And what we're seeing is China is really the one driving cost here. South Korea and Japan are always chasing that Chinese price point. And that's a major issue to always be thinking about. So next, the report breaks down shipbuilding across the 5 major countries and areas. So you get China, you get South Korea, you get Japan, you get Europe, and then you get the rest of the world. But the one that jumped out to me was this chart right here that shows you the top 10 world shipyards by current order book. So right there, you see them listed. What's particularly worth noting here is the place of China in this. So CSSC, which is the China State Shipbuilding Corporation, they remain the #1 shipbuilding group worldwide. They hold 32.1% of the Chinese order book, but by themselves, they control 22.7% of the global order book. Then you have Hengli. In only 3 years, this new private yard owned by the Hengli Group, which acquired the former STX Dalian facility, has secured an order book of 41.6 million deadweight tons, 272 ships. That's 12.5% of the Chinese order book. That's 8.8 globally. In third position is COSCO. Now, this is right behind Korea's Hyundai. COSCO Shipping Heavy Industries has an order book of 26.2 million deadweight tons. They represent 7.9% of the Chinese order book, 5.6 global. Then you have Maritime Shipbuilding. That's one of the largest private shipbuilding groups in China, in fourth place. And then for China's fifth position, you have YZJ, that's Yangzi Zhang, one of the country's largest private groups with 4 large facilities. The report also highlights new shipyards being opened or reopened and the expansion of existing yards. If you look at the individual segments in terms of bulk, CSSC remains the leading shipyard for dry bulk orders in 2025. YZJ is leading in terms of container ships, and the tanker segment is kind of divided up between 3 shipyards: DSIC, Hengli, and NTS. One of the areas that China is beginning to crack into is the cruise ship trade. Now, they just delivered their second large cruise ship, but the area that they're focusing on isn't going to be the large cruise ship, but actually expedition cruise ships, smaller cruise ships. That seems to be a sector that the Chinese see some opportunity in. Now, in second place is South Korea, and they benefited greatly by the U.S. calling for, getting away from Chinese-linked ships. Their yards increased their new orders by 19.4% from 24 million deadweight tons to 34.3 million deadweight tons. Korean yards are still dominating the construction of liquefied natural gas carriers. They account for nearly 70% of that sector. One of the things we've been seeing in Korea is the consolidation of their shipbuilding industry. 89.7% of new orders in 2025 were secured by the big 3. That is HD Hyundai, which got over 50%, Samsung at 10.6%, and Hanwha Ocean with 19.3%. So one of the big things we're seeing is expansion abroad. So, for example, HD Hyundai has branched out into other countries: Vietnam, Philippines, India, the United States. We're seeing it Morocco. So a lot of different areas for their movement. Peru and Saudi Arabia. Samsung is also doing a very similar aspect, and we know Hanwha is doing that in the United States. So Korea is looking to move out of Korea into other areas, largely because of labor and demand. Now, the nation that's probably in the most threat here is Japan. Japan's market share has been dropping substantially from 15.3% in 2023 down to 8.9%. Now, Japan's 4 major shipyards, Nihon, which is Imabari and JMU, Oshima, Namura, and Shin Kurushima, they secured about 82.3% of all orders in Japanese shipyards, with Nihon with the vast majority of that, 36.4%, Oshima with 20%, Namura with 16.8%, and Shin Kurushima with 9.1%. However, the decrease we're seeing in Japan is substantial. Now, the way Japan has been dealing with that is really announcing significant investment plans in their shipyard. Many yards are seeing hopes to double their output by 2035. They're dealing with aging facilities that they require some long-term investment. They also need installation of new cranes, robotics. But the labor supply and material costs is the big issue facing Japan right now, and this is true of many shipyards. Japan really came out in the 1950s and 60s. There was a massive investment into Japanese shipyards post-World War II. They went from building the IJN, the Imperial Japanese Navy, to building world supertankers. This is where, Daniel Ludwig went, because the dry docks there were in Kuri and Sasebo for building the Yamato and the Musashi. So now Japan is facing the situation that the U.S. has long faced, which is aging infrastructure, an aging population, and getting its government to reinvest. Japan has been a little bit slower than Korea to go overseas, but they are starting to do that. Next, we head over to Europe. Now, Europe has basically remained on par since 2024. European shipyards have increased their order book from 11.2 million tons to 12.6. New orders decreased from 98 ships down to 70. Now, if we take this and break it down by countries, you can see that Italy leads the pack here, both in terms of tonnage and ships, 47 ships, nearly 5 million tons. Germany and France with a close second and third place, and then you fall off with Finland in fourth, and the Netherlands, which is really focusing on very small specialized vessels, along with Turkey, in that fifth and sixth spot. So even Europe is at a risk here. They're losing a lot of their industry over to East Asia. If we look at the rest of the world, it's not good. There's no way to sugarcoat this one. 3.5% of market share in 2023, down to 2.6%. If you look at new orders, they have decreased sharply with just 25 tankers, 5 bulkers, and no containers ordered in 2025. If we break it down by countries, Vietnam has gained the position of being the largest shipbuilding nation in the rest of the world. They have about a third of that order book for the rest of the world. The Philippines is close behind them, and then Taiwan, and it's really a diminished fourth place here for the United States. The thing that's making the U.S. uptick here a bit is the 12 new orders placed in Hanwha Philly for 10 MR2 tankers and 2 liquefied natural gas carriers. India, which a lot of people have been talking about India, really is not yet registering yet as a major shipbuilding nation. They want to. They're trying to invest heavily in that sector, but they've just not been able to really get into it. All right, so what does this all mean? Well, 2025 ranks as the industry's third highest ordering year for ships, after 2007, which was right on the precipice of the huge economic disaster that was 2008, but also right after 2024. So it's a big year. Now, can we look forward to in 2026? Well, the need for new tonnage remains. As the fleet gets older, recycling is not happening. That's going to be a big issue that we see. There's a lot of potential for new shipbuilding industry supercycle, and that could be driven by the need to replace large number of non-economical vessels that were ordered between 2005 and 2010. As these ships get older and they're not meeting the environmental issues, we can see them go. The demand for container carriers remains strong and could continue moving towards feeder and medium-sized vessels. We're really building a lot of the big ones. Question is, do we need to fill in the gap of those other areas? Bulk carriers, which comprise the most significant portion of the whole merchant fleet, still represents the least contracted segment in the fleet. In other words, we need bulkers. They're the largest sector, but we're not building them, and we're going to need new bulkers out there. And as for tankers, the level of contracting in previous years, now we've seen oil demand go down. It's been very disappointing. In fact, the number of tankers under construction reached a historic low back in 2022. Everybody is talking about this tanker supercycle that's right on the precipice, and yet we never seem to reach it. And that's going to be one of those issues that just remains. With tankers kind of going up and down because of Hormuz, will we see that happen? It's also worth noting that there'll be ample competition between the established shipbuilders and the newcomers in the Chinese shipbuilding industry with this second wave of expansion. And what we could see is some competition, not just between Korea, Japan, and China, but maybe within China itself, particularly between private shipyards and state-owned shipyards. So BRS's prediction for 2026 is thus: 50 million deadweight tons for bulkers, which would mark a slight decrease from 2025. 60 million deadweight tons for tankers, which would mark an increase. 40 million deadweight tons for containers, that would mark a decrease, and 15 million deadweight tons for others. That would be approximately about 165